Today we're going to talk about mortgage, if it's the right time to buy. Jeff Myers is with Certainty Home Lending. He's the Vice President of Certainty Home Lending, and he's going to give us the scoop. So Jeff, give us the scoop if it's a great time to buy.
Hi, Winna. Thank you. Yeah, hi, everyone. So it's been a rocky up and down market, to say the least, especially yesterday with our hot inflation report. So our Consumer Producer Index report came out yesterday, our CPI report, and a little worse, hotter inflation than we thought. The Fed's plan to bring inflation down to 2% is taking a little longer than we thought. Everyone thought we'd be seeing cuts maybe May and June, and now that's really forecasted out to be farther down the road, so unlikely to happen in June. Rates are all over the place. They're up, they're down, they're 6.5%, they're 7%, very volatile week to week. But the big thing is we're still seeing our appreciation in our area especially, and I really think that's gonna even shoot up even more when rates do come down and it gets busy again. You remember when you're putting in multiple offers, much over asking. Right now we have some room to negotiate a little bit. We were just talking about southern credits and temporary buy downs, and probably need to leave that for a different video, but we have that room now, which is great.
Well, you just mentioned about home appreciation. We were doing a little comparison earlier, and it was showing one was 200 grand appreciation over the course of 10 years on your home, as opposed to renting. You're not getting anything back if you are a renter. So that's something we were checking out as well.
I think that historical value we were looking at, we ran a 63-year historical appreciation number in San Luis Obispo County, and it was over 5.5%. And that's just 63 years of appreciation at 5.5%. So we can look at that future forecasted amount, and it's really cool to see. And I think it's even going to increase more at the end of the year when rates do come down. And we do see those rate cuts, and people are jumping back in, and it's getting more competitive again.
Right. I'm hearing from some of my clients, my buyers there, they feel that they have to put that 20% down. Tell me a little bit more about that.
Sure. We don't have to put 20% down. There's some jumbo loans and investment property loans where the pricing might get a little better, but if it's just a first-time home buyer, conventional loan, I was just talking to a buyer yesterday, and was talking about how mortgage insurance has gotten very affordable over the last year, really even last several months. So they were looking at putting 20% down, but it was a stretch for them. So we looked at putting 15 or even 10% down, saving some money in their pocket, and then the mortgage insurance at 15% down was $72 a month, $73 a month. So very affordable, and they got to save that extra 5-10%, and it just makes them feel comfortable. They're able to get into that home. Rate's the same, doesn't change the rate, just but at $73 a month. I think to have that security and have that money to fall back on just in case is more important than just saving a little bit.
Yes, I agree. So Jeff, it sounds like to me that you really take a whole look at your client when they're purchasing a property. You just don't go, okay, the buyer comes in and they're like, I want to purchase a property for $700,000. It sounds like you go through all scenarios with them to help them make the best financial decision. Is that how you work?
I consider like an advisor and a partner in the deal. To me, it's I like to work backwards even. Not to say, hey, what do you think your month or your purchase price is going to be? I like to focus on your monthly payment and work backwards. What's going to be able to keep you and your lifestyle afloat by still having and picking up a mortgage? It's going to be with the taxes, insurance, and some owner costs that come with owning a home. There's going to be some new costs out there. I want you to still be able to get into this home and have fun and go on your vacations and go out to dinner and that kind of thing. So I like to look at the monthly payment and then work backwards. But yeah, definitely I like to become an advisor, a friend in the transaction that you can lean on, and really I like to look at the whole picture and really gain that trust and develop a friendship with our clients and to help them grow and upgrade into new homes. So that's what I like to see.
And
like not lose their lifestyle.
And you get to keep your lifestyle and get the house. So that's pretty amazing.
100%.
What would you say to those folks that are thinking about buying their first home and they're like, oh, I'm a year out? What would you say to them as far as when to get started?
I think whenever you're ready, whenever you're interested in getting started, there's nothing wrong with a mortgage lender.
Because I have clients that are like, they've said that to me, I'm a year out, and then they pass that year because your life gets busy and they've never money for a consultation to set everything up, and so they're out their year and I want to buy a house tomorrow.
Sure.
But we haven't done any steps yet.
I think that the best thing that we offer is when we do our pre-approval, in our initial conversations, we can do a soft credit check, so you don't have that ding on your credit report. That's really important to people just to get started, see where we're at. We can formulate a plan, look at your credit or look at your savings or whatever we need to work on. I like to call it like the tripod, your credit, your savings, and then your income. So where do we need to improve? Do we have all three? Is there an area where you need to improve? That's kind of how I like it. There's no reason to wait. It doesn't cost you anything. Come on down to the office right here and we can go through it together. And I love working with people for like a year and developing that and helping them get to the point where they can purchase a home.
Because some people still need to get things in place. And so I have found that if they wait until that year when they're ready, they've got to wait an additional amount of time. Maybe they found something on their credit that they had to fix because of fraud on it or something like that. Or they didn't know they were going to have to set up a down payment. They didn't know they were going to have closing costs. All of those things come with it. It is really good to speak to an advisor beforehand to make sure you're all set up so when you are ready to go, everything's in place for you and there's no surprises.
Yeah, I can't say it any better. You're always so much fun.
So, thank you for watching, and if you have any questions, need anything, you have Jeff on your side. He's an awesome guy, and he's here to guide you and help you, and you have myself. I love working with people that love other people and want to give back and to help you get what you want. Thank you. Bye.
Bye, buddy.